Hey my fellow investors, this is Julius with another video of investing. So today in this video I'm going to focus on those who attempt to time the market, hoping to make some quick cash doing so. Now you probably have heard stories either from your family members or through friends who timed the market. Either they sold out of an investment just before a crash or bought a stock simply because it was trending on the news and they thought they could make some money on it. Now first, I don't time the market simply because it's not sustainable, and personally, I don't think it's the right way to build wealth in the long term. Now, of course, before we jump into the video, I want to say thank you for those of you who have subscribed to the channel. And for those of you who have not joined the journey or the family of investing, please don't forget to like the video and also subscribe by hitting the red button below. That way, you will not be missing any of my video that I post weekly. And at the same time, you will join the journey of everyday investors who are trying to make it to the stock market. Now, for those of you who may not understand what I mean by timing the market, this is a strategy of making buying or selling decisions of investments, especially stocks, by attempting to predict the future market price movements. Now, in other words, participants of this kind of investment attempt to beat the stock market by predicting its movement and buying and selling accordingly. Now, in this video, I'm going to give you 3 of my reasons why you should not get into this kind of strategy or try to time the market. And I just want you to remember that these are my personal opinions. And remember, I'm not a financial advisor. So before you attempt to buy any assets or get into an investment, please seek professional help, because there is a chance of losing money when it comes to investing of any sort. Now, my first reason why I don't time the market is because it's time consuming. Now, timing the stock market can be time intensive. From day to day, there can be significant swings on trading prices. For example, if you take a look back last year in March during the pandemic, the difference between the high price of the day and the low price of the SP 500 was 325 points, which is almost 12% of the swing. Now, if you had intentions of selling at a high and you missed this day or even hours of this day, you could have missed your mark. Now, there are so many days where you think the stocks will end up trading lower than they started, but they reverse course throughout the day and end up trading higher than they started. And if this is the case, you may have ended up selling your investments at a lower price than you intended. Now, changes in the momentum can happen for a number of reasons. You may spend countless hours studying the stock market for clues that a crash or a correction is coming. And sometimes there may be signs that a crash is coming, but figuring out exactly when this is going to happen is kind of impossible or close to impossible, even if you have your eyes on your TV screen on every day trying to kind of time the market. And that's why it's so dangerous to time the market, because no one knows. The other reason why I don't time the market is because it can cost you money. Now, there are literally hundreds of different ways you can make money in the stock market, but people forget to look on how you can lose money in the stock market. You have to look at both to kind of get a balance of how the stock market works. You have to know how to make money. At the same time, you have to understand how you can lose money. Most times we lose money when we buy high and sell low. Now, if you've been investing in the stock market, you know the only way you can make money is when you buy low and sell high. However, guessing what's ahead is not an investment strategy, rather it's gambling. But the only way I know you can make money is selling high and buying low automatically by rebalancing no matter what happens. Now, in the end, like I said, my first point, nobody can consistently predict the short-term moves of the stock market. Sometimes you may get it right, but most times you got to get it wrong and you're going to end up losing lots and lots of money. So you have to have a better strategy than trying to time the market. Thirdly, my last point, it is because it's incredibly hard. And that's another reason why I don't time the market. Now, if you'd say over a 5-year period of time, more than 3/4 of large cap funds underperformed the SP 500. Now, these money managers spend all day on finding opportunities that will help them have an edge over an average investor. Now, the reward reaped for doing so could entice investors into their funds, but even with this benefit, the majority of them don't. Now, why it's possible that you fall into a category of the ones who sometimes do? How often do you get it right? This is a question you have to ask yourself. And how much higher would your average rate of return be? Now, it's not an easy task. And if these experts who have all these resources are having a hard time beating the market, imagine someone like you who's an average investor. What do you think is going to happen to you? Now that we've come to the end of the video, and I know I've talked about all these reasons, and if you have not picked up anything from this video, one thing I want you to understand is that trading can be fun, and actually it's supposed to be fun. But sometimes putting too much pressure on yourself could take away from this experience. And the fear of getting it wrong could even cause inaction on your part. Now, instead of spending all of your time and energy trying to beat the market, investing the core part of your money into an index fund or ETF or a portfolio of stocks that you plan on holding for a long time can help you pace with the stock market and meet your objectives. And if there's a part of you, I do love trading sometimes. If there's a part of you that loves trading, just use a small portion of your money. Don't use the whole portfolio to trade and trying to time the market to make some quick buck. You need to pick companies that you see yourself holding for at least 10 years, companies that you already know, companies that have been able to survive the pandemic and recession, companies that you use on a daily basis. Now, a lot of time we invest in companies because it's what's trending on the news and we don't do any research. And the downfall to that is you're going to keep on losing money. So try to get a strategy that works for you. And I understand some people make money through day trading, some people make money through trying to time the market, but it's not sustainable, like I said. Pick a long-term strategy, knowing that stocks they fluctuate and you can't stop that. But the only way you lose money is when you sell lower and buy high. And that comes when you time the market. But when you invest for long term, there's a high chance you're going to win. Always people who are investing for long term, they always win. Anyway, thank you again for watching another video, and I hope this content was beneficial for that person who is thinking of joining the stock market or who looks at the stock market of a way to achieve their financial freedom. Thank you. Please, if you have not joined the journey, subscribe to the channel by hitting the red button. That way you will join the family of everyday investors who are not making six figures, but they're trying to achieve their financial freedom. Thank you. See you in my next video.